forward-looking indicators are exploding higher, meaning we're all going to have some more money soon because the economy is going to be working better, our businesses will run better, our earnings will go up, and we'll feel a bit better about ourselves. That's what lies ahead and is at the essence of what matters in the banana zone. Now, here's where the magic happens. Altcoins, as a percentage of total market cap, so it's like the inverse of Bitcoin dominance, actually is driven by the business cycle. And that's because people take more risks and invest more money when they've got their earnings going up, when people think they've got a bit more money. And that is what drives altcoins. We've barely started. As I showed you before, ISM starts going up, altcoins go bananas.
The long-awaited banana zone is here, and cryptocurrency prices are surging. Bitcoin, the largest cryptocurrency by market cap, is leading the charge with an 8.4% increase in the past week, a 22.5% rise over the past month, and an 80.8% jump year-to-date, currently trading at $76,120,000. This rally began just before President-elect Donald Trump's historic victory and gained momentum after the U.S. Federal Reserve announced a 25 basis point rate cut. Other cryptocurrencies are also benefiting from the rally, with Dogecoin, Cardano, and Solana rising over 20% in the past week. Cardano saw an astonishing 2,467% increase in the past week, while Ethereum and Avalanche have surged by 18.8% and 16%, respectively. The Crypto Fear and Greed Index is reflecting extreme greed for the first time in months, signaling growing investor optimism. Raoul Pal, founder of Real Vision, calls this the banana zone, a phase in every crypto bull market marked by significant price increases. He believes we are officially out of the boring zone and into the banana zone, where crypto prices will continue to rise sharply in the coming month. Pal predicts more all-time highs for Bitcoin and leading altcoins like Solana and Ethereum, fueled by central banks injecting massive amounts of liquidity into the economy.
The banana zone is that point when crypto prices go exponential. And while we all love this and our hopes and dreams are all in that yellow fruit, I wanted to get everybody on the same page of understanding so you know where we are and why we're here. So I'm going to run through a selection of charts, many of which you'll never seen before, that gives you a much deeper understanding of what's going on and what we might be able to look forward to ahead. Because the banana zone is a very special time. Now, since 2008, everything has become cyclical, because in 2008, every central bank around the world reset interest rates to zero. It was like a debt jubilee. You don't have to pay your interest, so the world could kind of recover from the debt blow-up of 2008. And for about 10 years, we had zero interest rates. And what the governments did is they reset all of their debts to between 3 and 5 years. That cycle has created a perfectly cyclical business cycle. The ISM, the Institute of Supply Managers survey, what we've got here is in black is the current cycle, which is it's currently at its lows, but the forward-looking is actually just the previous cycle moved forwards and inverted because it keeps repeating the same cycle. So that same cycle is repeatable and understandable and forecastable. Sure, the wiggles may change, the direction will be right. And it's driven by this. This is the distribution of debt in the United States. If you look at the first two boxes, well, that's what 72% of the entire debt structure is 1 to 5 years, which is what I talked about before. This is what's causing the cyclicality that you see in the economy and these 4-year cycles. So because they're using the liquidity to manage the debt, the rollover years, which tends to be this yellow and the kind of weird peachy color, the summer and fall, those are when the peak debt rollover happens. So they add lots of liquidity. So if you look at that, you can see the liquidity piling into the system as they start rolling those debts over, and they need to print more money because they have to issue new debt to pay the interest on the old debt. Sometimes they use a central bank balance sheet. Other times they just create liquidity, and it's done on a globalized basis. Right now, China's the big liquidity driver. And then you get those blue years, which are the winter years, when they start withdrawing liquidity because they don't need to service the debts because there's no debts around those periods of time. So that's why we get this cycle. And this cycle creates the Bitcoin cycle. It actually corresponds with the presidential election cycle and also the Bitcoin halving cycle. They're all those summer months. The summer months tend to be pretty strong. You can see the previous examples, 2012, 16, 20, all good months. are all good seasons or years. And then fall tends to be very strong. The fall in 2021 was still strong, but it had a stunted cycle because liquidity was starting to get withdrawn because they put so much in. But if you look at 2017 and 13, they were gigantic. So the fun is yet to come. When you look at it in year-on-year terms, you can see the cyclicality and how related Bitcoin is to global liquidity and how the seasons dictate that. So what we're looking forward to is the big rises in price ahead.
According to Raoul Pal, the business cycle is driving a positive trend, suggesting higher prices and an overall favorable economic environment for the next 8 to 12 months. This aligns with his Everything Code thesis, which outlines how demographic trends influence economic outcomes. In a recent post on Platform X, Pal explains that as the labor force shrinks, GDP growth naturally slows. This leads to an increased government debt-to-GDP ratio, which is necessary to offset weak growth and manage the compounding interest on national debt. Pal's thesis simplifies to the idea that an aging population causes lower GDP growth, which in turn requires higher debt to maintain economic stability and fund the aging population. To support this, central banks print money every 4 years, driving an increase in the overall money supply. We are currently in a number go up phase of the business cycle, with Bitcoin leading the charge. With Bitcoin on the rise, Pal believes we are nearing altcoin season, a phase when altcoins experience significant growth. According to him, this is when the real action happens in the crypto market.
Now, looking forwards, the business cycle is starting to pick up. So current ISM today is very lackluster. It's almost recessionary conditions, which is why many of you think we're in a recession right now. The forward-looking indicators are exploding higher, meaning we're all going to have some more money soon because the economy is going to be working better, our businesses will run better, our earnings will go up, and we'll feel a bit better about ourselves. That's what lies ahead and is at the essence of what matters in the banana zone. And you see the Financial Conditions Index, which is our lead in all of this, it's comprised of oil prices, the dollar and rates, is also suggesting that ISM leads, and it's a pretty good indicator. So it leads ISM, and by 9 months. So we kind of know the business cycle is going to be going up at least for 9 months and probably a lot longer. Now, here's where the magic happens. Altcoins, as a percentage of total market cap, so it's like the inverse of Bitcoin dominance, actually is driven by the business cycle. And that's because people take more risks and invest more money when they've got their earnings going up, when people think they've got a bit more money. And that is what drives altcoins. It's the same as small caps in equities. They're all driven by the same basic phenomena, which is the business cycle creates more activity, which creates more investment, which drives prices higher. So we've barely started. As I showed you before, ISM starts going up, altcoins go bananas. Now, when we measure altcoin season by using this 30-day outperformance, underperformance of Bitcoin, we're nowhere. We're still at 39%. That's mid-cycle range. We've got a long way to go. And that's when things get very excited. It tends to be the last 12 months of the 4-year season, that 4-year period. Those last 12 months are where all the returns come, and they lie ahead. Also, total liquidity is breaking out. We see these wedge patterns every time around the same time in the cycle. And then what happens is as soon as it breaks out, Bitcoin breaks out too. We're breaking out now. China is leading it. China's injected $8 trillion of liquidity so far since, I think, October, November 2022. Europeans about $1 trillion, the UK about $1 trillion. The US has actually been about flat, but we expect them to start injecting money soon via the Treasury General account. Okay, Global M2, it's a measure of private money. It leads by 11 weeks, Bitcoin. Perfect. And Bitcoin, banana zone. We keep going. So that looks great. Now, don't get fixated exactly it's going to be 100,000, but it seems in that kind of range. Basically, a strong end to the year and should get even stronger into next year. GMI total liquidity, another fantastic correlation, same kind of outcomes. Strong Bitcoin into the end of the year, and that's what we're looking for here. Ignore the corrective price action right now on that chart because it hooks up afterwards. So we should just continue over time higher. Okay, are we anywhere near the cycle top? I know people fret, oh my God, but Bitcoin's at all-time high. Surely I'm going to be buying the top. Surely Raoul's shilling things at the top and he's trying to find exit liquidity and all the nonsense that people talk about online. Basically, our cycle liquidity indicator is nowhere near where it's going to go. Also, look at the acceleration that happens before it peaks out. We haven't done anything yet. This has been super mild. So expect the acceleration ahead.
Ethereum, the largest altcoin by market cap, has outperformed Bitcoin over the past week, with a 16% increase compared to Bitcoin's 8.75%. However, it's still a long way from its previous all-time high of $4,875. Raoul Pal believes Ethereum will soon start to close the gap. In a recent tweet, Pal shared his thoughts, saying that Ethereum's growth is partly driven by the current risk-taking cycle, as well as the expectation that crypto regulations will improve significantly following the election. This creates two key developments for Ethereum's future. First, utility tokens in decentralized finance are expected to offer yields or rewards tied to the underlying protocols, which will generate network value, and most of this activity will be based on Ethereum. Second, traditional finance is likely to build larger use cases on the most tested and widely adopted blockchain, which Pal identifies as Ethereum, along with its Layer 2 solutions. He compares Ethereum to Microsoft in the Web3 space, saying that it's the go-to platform and no one gets fired for using it. These factors alone could significantly drive Ethereum's value, offsetting its current underperformance in retail adoption compared to other chains. Pal also expects Ethereum to start outpacing Bitcoin for the rest of the cycle, though he believes Solana will perform better than Ethereum and Sway will outperform both. He notes that Sway is currently in the ultimate performance stage of adoption. Pal invites readers to share their thoughts on his predictions for Bitcoin, Ethereum, and other cryptocurrencies, as well as their impact on the global economy. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.